Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, welcome back to YouTube, and it's time for our weekly review of Bitcoin. Now if you're new to the channel, I would advise that you watch the first part of this video where we cover the long-term cycle. And if you are a veteran and you've been here many times before and you're already familiar with the long-term cycle, feel free to skip forward to the Elliott wave segment of the video. But I still feel there is great value to be gained in looking at the long-term cycle and having a refresher once in a while. Now it's important that those of you who are new watch this, because as the market continues to heat up into this approaching terminal phase of the bull market to come, things are going to get crazy. Things are already starting to get crazy, and it's during this period where those who have already been allocated are going to make the most amount of money this cycle, and those who are new to the market are going to make the greatest number and size of mistakes. And therefore I feel an excellent place to start, in fact the most essential place to start with an understanding of this asset, is with the long-term view. And so that's what we're going to start with. So let's turn off our primary count and bring up our market cycle. So here we have the prior market bottoms, the 4-year cycle of the market, our projected finish line for the bull market, and our projected next bottom. We get these by using our prior market data of bear markets and bull markets combined to get our 4-year cycle, and it roughly breaks down into 3 years of going up and 1 year of coming down. Obviously there are severe corrections in amongst the bull market, but they are not themselves the bear market, not on the grander 4-year scale. And we can see how prior bull markets, we've had an 1148-day bull market followed by a 413-day bear market. We've had a 1066-day bull market followed by a 364-day bear market, another 1064-day bull market followed by a 378-day bear market, and we're projecting as a rough guide another 1064 days into the future and another 300, and well, this leaves us 385 days to make up the bear market. So as you can see, it is a rough 4-year cycle. We can see our little cycle wave down the bottom here showing us where the next market bottom is projected. Our next market peak is in October 2025, so roughly 10 months away, maybe a little bit longer, maybe a little bit shorter. We don't know the exact length of this bear market. Or bull market I should say, and the next bear market low will be around November 2026. We can see the 3-year of going up and the 1 year of coming back, and the overall 4-year cycle has proven to be extremely accurate thus far. I'm not saying it's a guarantee and it's not a certainty, but we don't pick something less certain over this to explain what's going on. We stay with the thing that's been proven the most until it's proven wrong, and then we can adjust and come up with a new idea. But in the meantime, this is the best we've got to go on. So projecting forward in time, market will peak in October 2025. It will bottom on a Monday, the 2nd of November 2026. Okay, so now let's move forward and let's look at something I call the crypto seasons. Now many people have labelled these differently from one another. I believe it's entirely subjective, and in my own opinion this is based on my observed price behaviour. That's a whole bunch of factors. It's basically the overall price gain, the price action within it, the scale of corrections, the time frame, and the momentum and strength within those periods, and how I interpret that to mean the seasons of the crypto cycle. So we break down what is essentially a 4-year block of going up and going down into a single block of 4 years, into a block of 2, 3 years going up and 1 year coming down, into a block of 4, 3 segments going up and 1 segment coming down. The segment coming down, the bear market, will be known as winter, obviously, and then we have spring, summer and autumn. Now I believe regarding the crypto seasons, we are most of the way through summer, and we will be entering into spring of next year 2025, which will be our autumn of the crypto cycle, of our last year of going up, before we enter the next big bear market. So what autumn we're going to get, we're not going to know until we're in it. It could be a double topping process like we saw in the last autumn, or it could be a blow off move like we saw in the 2 prior cycles. I'm leaning towards a blow off move because my primary count suggests that we need more and more gains and more momentum going forward at a larger time frame, but that's something we'll talk about with the Elliott wave count. Another thing I want to take of note here before we come and look at our halving data is I just want to show you the overall scale of the corrections, the severity of each of the corrections, because there are several patterns which emerge. It's not just the length of the bear markets and bull markets, it's also the scale of them. So we can see how we've gone from having a 93.7% correction and then to an 86.08% correction to an 84% correction to a 77% correction. So the trend is clear that each bear market, each winter, is decreasing in severity. Now they're horrific to go through, and the new you are to the space, the more they hurt. The older you are to the space, the more wonderful they are, because these are opportunities to buy the premier financial asset on planet Earth, and by that I mean the one which goes up the most over time and has recorded the greatest gains and results over its lifespan by miles. Nothing else comes close. Then we get the opportunity to buy it cheaper, significantly so. So these are hence why I mark the market bottoms in the cycle. These are the optimal moments of financial gain, financial opportunity. So yes, that opportunity is reduced each time a little bit, but it's still significant. It may be in the low 70s next time, it may be in the 60s, it may be even less, but it will be the next real opportunity to buy when there's maximum pain, maximum terror, maximum frustration. That will be the next buying opportunity, and that's what those us veterans who've been here for, this is my third rodeo, I've been through this cycle 3 times. There are people who've been through it more times than that, and there will be people who've been through it significantly less. But that's when the next big opportunity is going to come, and that's when the next big opportunity to allocate heavily will come, and then we can enjoy 3 years of gains again. But coming back to the current time, coming back to the present I should say, we're now in that final year. So we've got it all to do before it all goes wrong. But how much have we got to do? Well, that's the interesting point. Now, I could just talk about price targets. I'm not going to talk about it here on YouTube. I've done a video dedicated to that on the Patreon. If you want to know what my price projections for the peak of this cycle are at this finish line, you can sign up to the Patreon. You only have to join it once and you can get access to that information. You don't have to renew your membership each month. You can just join and go and watch that video, plus all of the Elliott Wave stuff and other educational material and all of the other exclusive content, including live streams that I put out. Go and absorb as much as you can if you want. But that's where you'll find my price projections. But in the meantime, what kind of gains have we seen before during this spring, summer and autumn? Well, in order to learn that, we're going to have a look at our halving data. So here's the halving data on the chart. So if we come all the way back to the halving of November 2012, we saw a pre-halving total bull market move of just 1.04%. Now that doesn't mean that this move off of the low was 1.4%, that was 513%. What I mean is out of the entire bull market within that cycle, so from the 2011 lows into the 2013 highs, we saw a total rise of several thousand%, right? But only 1.04% of that entire bull market occurred pre-halving. And that means, of course, simple deduction, that 98.96% of all of the price gain came post-halving. Here was the halving in November 2012. In the next market, in the next cycle, we saw a pre-halving bull market move of 2.56%. This was 297% from low to where the halving was. But what I mean is, once again, out of the entire bull market from the low of 2015 to the highs of 2017, we saw that 97.44% of the entire price move occurred post-halving, and only 2.56% of it occurred pre-halving. The pre-halving period is spring, right? That's where we get some big gains, 200%, 500%, whatever, but overall it represents a tiny percentage of the overall bull market to come. Okay, then we move into the next cycle, and we can see that in this case 91.6% of the entire bull market from the lows of 2018 to the highs of 2021. 91.6% of it occurred post-halving. That halving occurred in May 2020. Prior to that move, the spring of the market, 8.4% of it occurred. Okay, so 8.4% of the entire rally to come occurred pre-halving, and the other 91.6% occurred post-halving. So as you can see, there's a couple of trends here. Well, one clear obvious trend, which is the amount of overall market percentage the spring period of the cycle represents increases each cycle. 1%, 2.5%, 8.4%, and this therefore means that the summer and autumn combined amount before we reach that bear market, that decreases 98.96%, 97.4%, 91.6%. So that's where everything becomes a bit of a projection. So if this trend continues, we know that this spring period of the market, right, or spring's a bit, of a subjective term. Like I said, the seasons are subjective. It's not all in spring. Some of it's in summer in some cases. Some of it's mainly in spring in some cases. But the earlier part of the cycle, we should just call it the pre-halving part of the cycle. In this pre-halving part of the cycle, we can project maybe 10 in an optimistic sense, or in a pessimistic sense, 20% of the total bull market will have occurred here. This leaves the remaining 90 to 80% to occur post-halving. Now let me be absolutely clear, because I have had a few questions about this over again, because I'm sure some people just don't listen. I'm not saying that 80 and 90% gain from here. Okay, I'm saying out of the entire bull market, 80 to 90% of the entire thing will happen post-halving, right? Which was April this year, 2024. So that means the vast majority of all the gains are to come now. Okay, as they always have been, as we see, post-halving gain of 91.6%, post-halving gain of 97%, post-halving gain of 98%. So maybe we get 90%, maybe we get 80%, maybe we only get 75%. Who knows? We don't know, but if this trend continues, the pre-halving section will represent more and the post-halving section will represent less, and that's diminishing returns over time, which makes complete sense with this asset, as it does with all assets as they mature over time. So that's all our halving data. So, like I said, if you're new to the channel, or if you're still new to this asset class, watching this I think is invaluable, because we live in a world, an internet dominated world nowadays, which is just full of noise, full of fear, and it's very easy to get swept up in the short-term price action, short-term panic, short-term media cycles. You know how it's, I'm sure, for any of you who are awake, you know what's going on, you know the lies we get told, why we get told them and when we get told them, regarding every piece of information our political masters want us to believe. Okay, it's there for one thing, to manipulate us. Alright, and it's not just the big wigs who want to do it. There are loads of shysters out there on YouTube running their own little schemes, right, who want you to react, want you to believe, want you to do what they say, and want you to respond to what they're spreading. And they could be small, tiny little hoodlums, they could be big whales, whatever. They could be sponsored by interests, nobody really knows, but you know it when you hear it. You're being made to fear, you're being made to respond, and some of it could just be clickbait to get views, some of it could be for a more darker purpose. But either way, let's avoid being manipulated by short-term bullshit, short-term noise. That's the point. Stay focused on the mission, stay focused on the long term, and forget the noise. Okay, and you should, on that regard, you can listen to the more prominent long-term voices in the space. Now, anyway, that's enough. That's enough of that. Let's now think about some other stuff, shall we? Let's start with the primary count over the long term then. So, using our depth of corrections and our corrective form within Elliott wave, we can see that each of these huge bear markets that we've been through within our market cycle, okay, each of these huge bear markets are a simple zigzag in structure. It could be a double zigzag, it could be a simple zigzag, but they are all defined as sharp corrections. Sharp correction, sharp correction, sharp correction. They are all severe, almost 80%, over 80%, over 80%. These strike me, with our understanding of Elliott wave theory, as wave 2 corrections. Wave 2s are notoriously deep and are more likely to be a sharp correction as a result of being that deep than they are to be a sideways correction. None of these are sideways structures, therefore none of these corrections represent an alternating corrective form with their prior structure, meaning that the likelihood of any of these subsequent structures being a wave 4 to any of these prior wave 2s would be incorrect and would be far less likely to have occurred. Therefore, given the depth, the severity and the form, we've come to the conclusion that they are simply 1-2 at supercycle degree, 1-2 at cycle degree, 1-2 at primary degree, and we are now within the 3 at primary degree, within the 3 at cycle degree, within the 3 at supercycle degree. So if this holds true, then this should be the period in Bitcoin's history where the greatest awareness, adoption, institutional involvement occurs over the next decade. And I would argue that as we progressed through these early cycles into these later cycles to go into the 3 of the 3 of the 3 of the 3, I'd argue that that narrative is perfectly on course. Almost perfectly on course. Where we've gone from no one knowing about it, to more people of the general public knowing about it, to institutions knowing about it, to the President of the United States knowing about it. Okay, so everything is progressing exactly as one would expect. Almost uncannily. But this is if this is correct and there's anything to Elliott wave over the long term, then this makes perfect sense. So we are now within the primary 3 of cycle 3 of supercycle 3 and progressing higher. And all I've got is this pitchfork placed here on the 1 into the 2 at primary degree, and you can see that we're still running along the bottom of it, below the median line, and we have a long way to go. There are 2 ways of interpreting, well there's 3 ways, actually 3 main ways of interpreting the short-term count. So I'm just going to turn this off just to be super simple. The first way of looking at it is that this is 1, 2, 1, 2, and we're going into 3. Now 3, 4, 3, 4, 5 to get the top of the longer term cycle, primary 3. An alternative way of looking at it is that we have had 1, 2, 3, 4, and we will now have a blow off 5th. Okay, and that blow off 5th will complete primary wave 3. Here's 1 primary wave 2, primary wave 1, primary wave 2. This will be primary wave 3, maybe heading towards the median line. That's a possibility. We want to keep in mind that we're still aiming for a completion around October 2025. So this would have to be a very dragged out and drawn out 5th wave in terms of time frame. It would have to be significantly longer than both the 3 and the 1 before it. Blow off 5ths don't tend to be very long in time frame. They tend to be quite short, explosive but short in time frame. So this would be a contradiction, and therefore it is not my primary count. My primary count is we've done 1, 2, 1, 2, and now we've got 3, 4, 3, 4 to come. The wave 4s within prior Elliott wave, prior 5 wave moves within Bitcoin have been quite brief, and therefore I think there's enough time to put in 2 wave 4s at 2 degrees before we complete that 5th to complete the 3rd. I hope all of this is making sense. Like I said, you can learn all of this stuff on the Patreon, and if you haven't got a copy of the latest version, 12th edition Frost and Fracture Elliott Wave Principle, you should go and buy it and learn it for yourself. It's pretty bloody cheap for the value it gives you. Either way, so there's 2 ways of looking at it. Another way of looking at it, which is the idea that we've only done 1 into 2 thus far this cycle at intermediate degree within primary 3, and we now have 3, 4 and 5 to get in before the end. Now I believe this has the opposite problem of having suggested 1, 2, 3, 4, and we have got far too much time left for just a 5th. This is the opposite problem. We've done 1, 2, and now we've got to get 3, 4 and 5 in before the finish line. This feels like there isn't enough time to do it, and therefore my idea preference is 1, 2, 1, 2, because it progresses the count further along, but not so far along that we have to rush or that it'll take too long. It's the Goldilocks choice for me, and that's why it's going to remain my primary. But all of these are valid options. They're all valid options, okay? I'm not dismissing any one of them. So now I just want to share a couple of interesting little pieces of geometry. with you, and an old school technical analysis chart pattern that we've been able to observe over the last cycle, and then we'll move on to all the Elliott wave sections. So first thing I want to share with you is this lovely cup and handle. Okay, so a cup and handle, I have a video on my Green Star Trading Patreon, on the Discord, on the education section, which covers all of the traditional chart patterns: ball flags, bear flags, pennants, cup and handle, bottom, double bottom, triple top, so on and so forth, and explains them in Elliott wave. And we explain the cup and handle in Elliott wave there as well. But we can see that structurally this is a beautiful example of a cup and the handle, and now the breakout to continue the prior trend is now underway. And if anything, if we have anything to go on, this should be a pretty violent and impressive move to complete the continuation of this cup and handle pattern. So sometimes, as I pointed out, as I was pointing out during this entire correction here, it looked like a ball flag. It is technically a ball flag, it just happens to be part of a cup and handle. And things, sometimes obvious things are actually obvious, and this was an obvious thing, and it's played out exactly as it should. The next thing I want to share with you are a couple of fib channels. Now, this is a bit subjective because I'm looking at both a traditional fib channel and an inverse version of it, just for confluence, for the sake of confluence. Technical confluence where multiple levels are being tested multiple times over. So if we take a look at the long-term fib channel I've got here, we can see, and this is going from the highs of the 2013 peak, from the lows of the 2015 low. Now why am I doing that? Because that's our largest wave degree. That's our super cycle 1 into 2, and therefore I'm projecting that the fib channel based off of that first super cycle wave is roughly going to be the shape of the market to come. It's going to project forward in time the geometry of the whole market. And that's what I'm working on here. So we can see how pretty much it's been accurate. The first overrun into cycle degree came all the way up to the negative 23.6. If we were using an inverse fib here, this would be the plus 23.6 extension. Okay, and then we came back to the golden zone, 61.8 to 65. And as you can see, this area here interacts frequently with the price. Here's two highs here. We can see how it has here on the 23.6, 38.2, 38.2, 50. Okay, 23.6, 23.6, 78.6 perfectly here, 61.8, 65, 50 around here. And we can see 23.6, 23.6, 50, golden zone again, 78.6 again, golden zone, golden zone, golden zone, 50, golden zone, 50. You can see how this thing is basically projecting the market forward in time. Okay, now how long it takes to move in between these levels, you'd have to have a crystal ball. We don't have a crystal ball, but we can see that it does play a significant role. And I believe that everything projected forward off of this pivot is so far playing out perfectly. So we can expect to continue to move between these levels, right? It's a very simple deduction to make. We can continue to expect to move between these levels over time, and I think this will continue to play out way off into the future. Now, if we were to suddenly break much higher or collapse through these levels, that would be concerning. Well, it wouldn't be concerning if we went higher, that'd be awesome, but if we went down lower, that would be concerning. And then we've got the inverse of it, which is every time we come back in to the 61.8, 65 or the 50, or the 78.6 on the other side, we meet very strong resistance and it works as support again. So we can see here's the 78.6 operating as resistance. Here it is then operating as support. Just like a horizontal resistance becoming support, the same happens in this diagonal fib. I don't mean diagonal Elliott wave structure, I mean it's like the angle it's working at. Here it is then operating as resistance, and here's the support on the 23.6, so on and so forth. So these two together are basically projecting the areas that the market's going to move between, you know, over the coming years. Which I think is just an awesome piece of geometry. I think everyone should pop this on their chart. And there you go. That's basically the long-term bits and bobs I wanted to fiddle with. We can have a quick look on the weekly time frame at our exponential moving averages here. We're still above the 10, 20, 16, 250. All are pointing up. All the bullish momentum continues to be strong to the upside. Monthly time frame, we don't get the 250 monthly fib. 250 monthly exponential moving average, I should say, yet. We haven't been around long enough as an asset to do that, but it will come one day. A green line will start to appear. But as you can see, this recent monthly candle is extremely strong, coming straight off the 10 monthly average and just bouncing higher. Okay, same true on the day time frame, which we're above all of the exponential moving averages as of yesterday's close. And then now if we come in to look at some classical analysis on the longer term here, for our momentum indicators, let's come out to the weekly time frame. I'll start with the daily time frame. We can turn off the market cycle here as well, and the moving averages for a moment. We can see how we are coming off of overbought conditions and some bearish divergence into a pivot we had in place here. So we had this big boost of volume, and then we had bearish divergence between these two highs on the RSI. This is a warning of potential, I do hate it when it's not allowing me to do that. Let's just come down to where I placed that. This will be relative strength, the most recent one. All intervals. There we go. Don't know why it does that. So we had bearish divergence here building up, and then we've rolled over and come back off of overbought conditions back into neutral. We have had a pretty strong candle on the daily though. Yesterday's close was very strong. This could have been a brief correction within a larger trend, and now we will continue to build greater divergence on the longer time frame, or we'll blow it out of the water and continue higher. Average cross for the single line on the MACD and has moved lower. We saw momentum dying off into this high as well. You can see here. Alright, so there's a warning that we're coming into a short-term top here, and that seems to be playing out currently. OBV continues to march higher, higher highs and higher lows. Weekly time frame, we can see that momentum now on the weekly time frame on the histogram now is stronger than it was going into this prior high here back in March 2024, or March of this year. So we're actually increasing the overall momentum in this move higher as we break through all-time highs. There is divergence between the prior highs and current highs on the weekly time frame, but there's no pivot in place yet. But there is long-term divergence showing up here, so we do have to pay attention to this. I don't think it's a sign of a bearish top coming in yet. I think it will likely disappear in time, and we will continue to push more extreme levels in the RSI. If the momentum overall in this move was significantly weaker than the prior highs, I would consider it, but at the moment we're stronger. The average line is still expanding higher. I think it will go above the previous highs, and I think the histogram will be larger, as we already have seen when it has been in prior highs. OBVs continue to make higher highs and higher lows and progressing this upward trend. On the monthly time frame, we can see that the momentum is indeed going to new all-time highs, higher than the prior cycle. This is something that I really like to see. This cycle had greater momentum than this one had greater momentum than this one, and this one now has greater momentum than the last one. And this is one of those sticking points which a lot of people were really giving me a bit of a hard time over, if I'm absolutely honest, saying, well, the momentum in this cycle is less than the last one, that's why we're still in a bear market. No, you were all wrong. It wasn't a bear market. It was very obviously a bull market the whole bloody time. And now we've gone higher in the overall momentum of this cycle. But in the longer term, we've got a long way to go. If this RSI, this downward trend in the RSI continues, we've still got a long way to go until we reach these monthly extreme conditions, and we are not likely, just as we saw here with these prior corrections, we are not likely to come straight up in a straight line. We are likely to spend a fair bit of time going up, correcting, going up, correcting, going up. Okay, and we're going to work our way up on the monthly time frame to that line. It may prove to be resistance again, we may break it, we may fall short of it, but as a rough guide, it's there. Okay, so now let's come into the short time frame and talk about the Elliott wave counts on the smaller time frame. We're going to start with the primary count, and then we're going to talk about all of the move through the all-time high and the rally we've been in thus far. So this count is invalid at 49577. And this is how I'm counting it so far. We have a base channel for our 1 and 2 minute degree. this was a expanded flat. You can count this as a double zigzag with an expanded X wave. I don't tend to like expansive X waves unless we have a sideways combination. If we have a double zigzag, the overall idea is to force price lower, and therefore coming to a new price extreme reduces the overall probability of that being correct. Doesn't make it impossible, but I much prefer an expansive B over an expansive X. You can label it how you want, but that's just the way I've chose to label it. We then come into a minuet 2, minuet 1 for a zigzag into minuet 2. We then come up in 5 waves into a sub minuet 1, back to the base channel again for another wave 1. Here's a wave 1, here's a wave 1, here's a wave 1. Keep testing the top of this base channel. We then come back into a double zigzag for a sub minuet wave 2, and then we get our breakout 3. Our breakout 3 so far I have as completing a sub minuet wave degree 3, A, B, C into 4, and now we're moving away into 1 at micro degree, 2 into micro degree, and we will continue to advance higher and higher. We can add a little parallel channel to this to show our expected wave 1 into 2, wave 3 into 4, and then if we bring that into our short time frame count here, what we can also add in, just as a point of interest, is the retracement of the wave 4. Now wave 4 targets are 23, 6, 38, 2 and 50, so if we bring that up to here, we can see that we come straight to the 23.6 to the absolute tick and bounce straight into this little volume area here. So we may be done and now progressing higher. If we are, we're likely doing it as 1 into 2 at micro degree, and we'll now continue higher within this channel. If we break down through that prior low, right, then it's likely we're completing a larger degree. So let's talk about the possibility of that. Here's another short time frame possibility. We're going to put that into that folder so we don't lose it. And this is the idea that we've actually already done minuet 1 into 2 and are now working on minuet 4. We've done minuet 2, this is now minuet 4, and therefore one can expect this to be deeper, right? So at that point we would adjust the channel to go from 2 to 4 from 3 instead of from 1 to 3 to 4, but we don't have a confirmed late wave 4 in yet. We can't be certain, so we're going to wait to see if it does come lower. If it continues higher, then so be it. The other count is correct, more likely correct, but we could still get a flat pattern, something like this, where we go down, up and back, and then that would be our wave 4 over here. These are all possibilities, right? Depends on what the price action does. And then we would take the channel that we've got here, and we would, instead of arranging it 1 to 3, we would arrange it 2 to 4. So it'd be easier to just get a new channel, wouldn't it? Just do that, and then project from the 3, and this would project the 5 for the 3, for the 4, so on and so forth. Now we can't do that yet. We've just got the original acceleration channel for the moment, and we're just going to stick with that since that seems to be the best fit so far. We've even got very typical extension behavior coming out of here, where we continue to fall out of channels. The best example I've got of that actually is with a pitchfork for the minute wave degree. Let me just show you that before I forget about it. Check this out. If you remember, you'll know from watching the video on pitchforks on the Green Star Education channel that this is extremely typical behavior for an extension. It's almost absolutely textbook. It seems to still be one of those things which flummoxes people when they see a lot of sideways structure and they have a hard time grasping 1-2, 1-2, 1-2 nesting structures within a wave 3 extension. I reiterate the point time and time again. The wave 3 extension is the most common Elliott wave bullish structure there is. Why is that? Wave 3 is the most common extension of the 3 motive structures of 1, 3 and 5, and therefore a subwave structure of overlapping 1-2s is the most common beginning to any bullish move. It's not always the case, but it's the most common, and therefore one of the ways of identifying it is this typical behavior of falling out of that primary pitchfork. We progress sideways and up away from the initial pivot of 1 into 2. The 3 within the extension at the smaller wave degree then forces us back into the pitchfork, finding the median line, finding support, finding the median line, finding support, progressing through the median line, finding support, progressing higher. That tends to be the most typical behavior we see. It's not going to play out perfectly all the time, but this is textbook. A textbook extension behavior. And that's exactly what we're doing in the count at the moment. And therefore I prefer this look to it. So to sum up again, because I know I've just said a bunch of stuff, we are within the wave 3, in my opinion, at minuet degree, within minute degree, within minor degree, within intermediate degree, within primary, within cycle, within super cycle. So what's that? 7 degrees of wave freeze. Currently within the microwave 3 of subminuet 5 of minuet 3. So we've got just overlapping for days now. For weeks and months even. We've just got overlapping for weeks and months. So we've had all our 1s and 2s overlapping, and now we've got 3 into 4, 3 into 4, 3, and so on and so forth as we continue to push the price higher and higher and eat up time. So there'll be a lot of chop, there'll be a lot of gains, there'll be a lot of chop, there'll be a lot of volatility, there'll be a lot of people, mostly noobs. We've all been noobs at some point. I'm not using that word derogatorily, it's just a fact. There'll be a lot of noobs getting chopped up and sliced up. So for the love of God, don't play with leverage under these conditions. Play it sensibly. Don't let the fear and the short-term FUD shake you up. Alright, it's all part of the plan. It's all part of the process, and it's what we have to do to get to the highs. Alright, so just stay cool and keep the long-term picture in mind. Alright, so that's the primary. Just to zoom out, because I know I've started right at the top here. 1 into 2 off of the 2022 lows, 1 into 2 again, now progressing within the 3 of the 3 of the 3 of the 3, accelerating and going higher. That's not the only count we have though, so we're going to come and have a look at some others. The wave 2 alternate I mentioned on the BLX earlier on the larger time frame. This is all 1 into 2. It seems pretty shallow for a wave 2, which is why it's not the primary count. But it was enough to get to the 38.2. Okay, which is not an insignificant retracement. It's not particularly great, it's not particularly deep either, but it's not insignificant. It was also overall a sharp structure, not a sideways structure, which also gives it some possibility of being a 2. However, what I would argue in this circumstance is that we've got something much nastier to deal with. Right, let's come back to our prior breakout here, which will be support. If this is all 1 into 2, then this is another 1. And that means that when this 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4 is done, this will be 1 into 2. And we'll have a really nasty correction early next year. Right, post Christmas, early post New Year, we'll have a really nasty correction down into February or so, and then we'll go off into the 3. So this is one to keep in the back of our mind in terms of maybe you want to consider taking some off the table, as and when appropriate, but it's a possibility that if this is a 1 and a 2, we will get another 1 into another 2, and that could be quite nasty. Then we'll get 3, 4, 3, 4, and that will take us out into the end of next year. So it's something we want to keep an eye on. We'll see. I mean, I've got it as an alternate for a reason, because I think it's possible. But the primary is that we've now gone into the wave 3 at every degree, and I'm now progressing higher. Next count, the wave 4 idea, that we're now in the 5th. Now, this also argues for another wave 1, or for an extended wave 5th within the 5th, or for an extended 3 within the 5th. It's playing out as an extended 3 at the moment, but we don't have a large enough wave degree, I feel, to rule out another wave 1. What the hell are you talking about, Tom? Let me explain. 1, oh dear, don't want to use that. Let's just use the polyline again. So 1 into 2 accelerates out of the base channel. 3 into 4. This is all now 5. How is the 5 going to be constructed? Well, we're not peaking until October. Right, that's the rough estimation, right? We're not peaking until October. So how's this going to play out? Well, this could all be an extended 1 with an extended 3 within the 1. Here comes 1, here comes 2, then 3, then 4, then 5, off to the highs. We still get that nasty correction, which we're considering as a possibility within our wave 2 alternate. There's also the possibility that that's not the case, and we get an extended 5th. This is 1, this is 2, this is 3, this is 4, and then all of the 5th of the 5th is the extended wave, and we don't get a horrible retracement. We just get maybe some real time consuming shit going on instead later on. I honestly don't know. All of these Elliott wave structures are valid. So we have the prime. We'll do a quick summing up now, because I know I've covered a lot of stuff. So primary wave degree, we've gone 1 2 1 2, we're now in the 3, and we have 3 4 at larger degrees, minor degree and intermediate degree to complete until we reach the top of the bull market. We have lots of short-term ways of doing that. We can only see them on the 8-hour. Right, so we have 1 into 2, 1 into 2 at minute and minuet degree, but we also have 1 into 2, 1 into 2, 1 into 2 at subminuet degree. This is 1 degree less. Either way, a bunch of overlapping wave 4s to come. Right, but no nasty retracements. No really nasty retracements. There'll be pullbacks, maybe 10, 20, 30%, but there won't be any really horrible ones. Then there's the alternate idea that all of this is a wave 2. So we've gone wave 1 into wave 2 at intermediate degree, and we'll get another 1 and another 2, and there will be a horrible fallback. And the most likely place to find it would be at prior resistance, which became support, which will become support, which is the previous all-time highs. That big horrible sideways block back here around 72,000, and we will come racing back to this in the early part of next year, and then we'll rock it out. Now it will be horrible, but it will be an amazing opportunity for those who have yet to get in. And it kind of feels kind of right the more I look at it, because I've been through this 3 times now. It's my 3rd rodeo, and I know that these corrections into the later bull market can be really nasty, really scary. 40% correction that would be, and it would grab every person who's chased it since the breakout and it would wreck them. And that feels very normal, to take all of those people who've gotten over exuberant and just, you know, execute them publicly, and then we can buy their Bitcoin as they sell it to us for less, and we can enjoy the run up further. Sounds cruel, sounds harsh, but this is the way the markets work, you know. So that's a possibility. Finally, it's all got to be done in the 5th wave. We've gone 1 2 3 4. It's all got to be done in this 5th wave now. If this is an extended 1 within the 5th, we could get a really nasty retracement back to support. If we've already done 1 2 1 2 and this is an extended 3, we'll just go sideways in 4, sideways in the 4, and then maybe we get a extended 5th to push us out 5th of the 5th, and it just goes completely crazy. Right, that would probably mean that both the 3rd and the 5th waves could be counted as an extension, but I think when we adjust for the overall scale of where we end up, it would actually be the 5th, which is clearly the extended wave, and the 3 and the 1 are both perfectly normal. You know, it's just a skew in the price due to how volatile this asset class is. But in the meantime, my primary count stands, and that's where I think we're going. Now, I haven't mentioned any bearish counts, have I? So I guess that's maybe where we should end the video, with some kind of bearish count. As the prices continued higher and higher and higher, it's become more and more difficult to do. So I think the best bearish count I've got now is that we complete a 5th wave imminently. I can't think of a long-term correction from a prior 2021 high which is still valid. They all look absolutely fucking ridiculous. Pardon my language, but they just look ridiculous, and the probability of them is extremely low. So I think it's more likely that we get 1 more wave degree, right, at intermediate degree, and this is a really nasty correction back through previous all-time highs, deep down into another wave degree at intermediate degree, and then that would fit into our large primary wave structure. Long-term count, where are you? Where have I put that? Bear with me one moment. I'm just having a brain fart. There it is. So let's just zoom out. So super cycle degree, cycle degree, primary degree, and then intermediate degree. Another nasty deep correction coming all the way down. I think that's the only real bearish count I can believe is probable. Okay, now in order for this to happen, the 4-year cycle we've been observing would have to break. Okay, we'd have to have a much shorter bull market and a much shorter bear market at these wave degrees before we come back out into a wave 3. Okay, so everything we've established in the longer term time frame chart would have to break Doesn't mean it can't happen. It can happen, but it's the most viable bearish count I have. Any other bearish count at this point is, I think, a little beyond unfeasible. Okay, but we're still in an upward trend, right? We're in a trend of higher highs and higher lows on both the very long term, the short term, medium term. It's all up. So we should stick with the trend. The trend is your friend, and we don't break that trend unless we get back below 49577. Above 49577, and especially while price holds above support at the previous all-time highs, we should continue to be bullish in our short-term outlook. It would be foolish not to be. Don't fight the market. Don't sit on top of a rocket hoping it comes back to earth. Okay, and don't try and catch a falling knife, you'll slice your fingers off. Both rules always apply. So there you go. I know it's been a bloody long one today, oh my god, hasn't it? I've waffled on and on and on, and I'm sure you're all absolutely sick of me by now, and you should be. So, because you're not going to see me again till next week. I've got family down this weekend, and on that note, that's why there's only been one video this week. I did a 4-hour live stream for my patrons the weekend just gone, and I put out an exclusive on Tesla this week for them as well. So if you are new to the channel, or you're not new to the channel and you've been here for ages and you like what you've seen, please subscribe if you haven't already, smash the like, hit the little bell notification icon to remain informed of future video releases. And if you haven't joined the Patreon yet, there's a link in the description box below. Please consider signing up, where you can get access to my Bitcoin price targets. You can get access to the entire Elliott wave series I've done. Loads of exclusive material, educational material, weekly live streams, weekly exclusive content, public Discord, dividend calendar, stock rating system. All these things are available. Follow the link in the description below and sign up today if you want to. If you're not following me on Twitter yet, please do so as well. I post on there whenever I upload a video to YouTube. Alright guys, take care of yourselves. Don't do anything silly, for God's sake, please. Don't miss this opportunity either. And take care of yourselves. All the best, and I'll be back with you as soon as I can. Bye bye.